The top business stories live from the Sky News City studio. A smaller than expected fall in inflation raises the prospect of delays to interest rate cuts. Shares of the Royal Mail owner International Distribution Services saw on news it's rejected a takeover approach from the Czech billionaire Daniel Kretinsky. Plus the new X-ray tech that could be a game changer for border policing. Good afternoon, this is Business Live with me, Ian King. The headline rate of inflation fell again in March, but more slowly than expected. The Office for National Statistics said that the Consumer Prices Index fell from 3.4% in February to 3.2% in March. That took the headline rate of inflation to its lowest level since September 2021. However, the market had been looking for a bigger fall to 3.1%. The ONS said food accounted for the largest downward contribution to the monthly change, while the largest upward contribution came from motor fuels, where prices rose this year but had been falling in March last year. The core rate of inflation, which strips out volatile elements such as energy, food, alcohol and tobacco, also fell by less than expected. The rate declined from 4.5% to 4.2%, ahead of market expectations of 4.1%.
We've seen large increases in the oil price. That's up more than 16% so far this year. And this is exactly what's been happening in the US. And actually what happens there usually makes its way over the Atlantic and impacts us here. So it's a global phenomenon. There is inflation in the pipeline, but for now, the disinflation trend in the UK is still intact. Inflation is a lot lower than it was this time last year, but it's a bit of a two-speed inflation with service prices still very, very high, but actually some negative prices compared to last year for goods price inflation.
Some other business news story for you now. And shares of International Distribution Services surged by as much as 27% at one point today on news that the parent company of Royal Mail has rejected a takeover approach. EP Corporate Group, which is owned by the Czech billionaire Daniel Kretinsky, said that on Tuesday last week it had made a non-binding indicative proposal to the company that had been rejected. Mr Kretinsky, who also owns stakes in Sainsbury's and West Ham United Football Club, is currently the largest shareholder in IDS with a 27.5% stake. EP Group, which is reportedly now working on an improved offer for IDS, said it looked forward to continuing to engage constructively with the IDS board. ASOS said today it expects to return to sales growth this year and to see profit margins back at pre-pandemic levels. The online fashion retailer was reporting a pre-tax loss of £270 million for the 26 weeks to the 3rd of March. That was down from one of £290.9 million in the same period a year ago. ASOS also named the former Sainsbury's and Amazon executive Dave Murray as its new chief financial officer. The shares have risen by 5.5%. The new chief executive of BT Group is dusting off plans for a sale of the company's Irish corporate business 4 years after her predecessor called off a deal. Sky City editor Mark Lyman says Alison Kirkby, BT's new chief executive, has engaged bankers at City to work on a potential disposal of the unit. BT came close to selling the business, which is the main alternative fixed-line communications provider in Ireland to the former state monopoly Eircom in 2019. The review of its operations is said to be in an early stage and may not result in a transaction. Now, we've all been frustrated by queues at airport security, despite the rollout of increasingly sophisticated body scanning technology. But the FTSE 100 engineering solutions company Smiths Group has this week launched a new scanner that it claims will be a game changer for border policing. The new X-ray scanner from its Smiths detection unit is powered by diffraction technology, which can identify substances and discriminate between materials based on their molecular structure. Well, joining me now to talk about this is Richard Thompson. He's Vice President of Marketing at Smiths Detection. Richard, welcome to you. I mean, a lot of existing scanners are based on the same technology that underpins CT scans that we see in hospitals. This sounds completely different.
Oh, good afternoon, Ian, and thanks for having us on. So, actually, the technology is not that new. It was discovered back in 1912 in Germany, in fact. It's a very clever technology which, by studying the angle at which X-rays are scattered when you aim them at an object, you can get very, very accurate material discrimination. So what this does is, as I say, give you a very, very accurate material discrimination. But the tricky bit is to take this technology, which for 100 years or so has been primarily in laboratories, and field it, industrialize it, and actually bring it into an application of sort of high volume, high speed use, which is what you typically see in airport for baggage handling, or indeed for fast freight forwarders and express forwarders.
What are the types of materials that are commonly confused?
So if you take an existing CT X-ray system, it's exceptionally good at detecting explosives, which is obviously one of its primary uses. The challenge, however, is that there are a number of items, as you correctly identify, which bear similar densities and characteristics to explosives, which is why when you're traveling through an airport, you'll typically find 20 to 30% of the bags are diverted to have another look, either by an analyst or indeed for the bag to be opened itself for a closer look. So typically, things like plastics, ceramics, rubber itself can resemble plastic explosives. Indeed, foodstuffs such as cheese even can resemble explosives, which is why, as I'm sure many of your viewers will know from having your bag opened at recheck, to find that it's only a foodstuff as opposed to anything more threatening.
Yeah. What's the order book looking like, Richard?
So we're here in Germany actually at the moment. So this is our launch week. The remainder of this year is going to be a number of live trials at selected airports and freight forwarders around the world, including Frankfurt as one example. So we'll be conducting these proof of concept through, as I say, the remainder of this calendar year. And in parallel with that, we'll be going through the necessary regulatory approvals which are necessary for it to be put into live operation. And we expect to get to full rate production late this year, early 2025.
And where will the machines be manufactured?
They'll be manufactured here in Germany.
OK, so roll out, assuming you get all the approvals, then probably around this time next year, from what you're saying?
Yeah, exactly. And as I say, there's it's a strictly regulated environment in which we operate. So we have to conduct that in a number of different locations. And then, yes, this time next year, as I say, full rate production. And we're very, very optimistic based on the interest which we've had over the past several months of engaging with the regulators, with the airports, the airlines, and as I say, the fast freight forwarders.
I've seen you being quoted on this, Richard, as saying it's going to render sniffer dogs redundant at airports.
Sniffer dogs will not be made redundant. I mean, indeed, this technology can carry out the role of identifying narcotics, such as sniffer dogs do. But it's really for, as I say, the sort of high-speed, high-volume application. Sniffer dogs will still have their use, and so it's very much complementary to a number of other techniques for narcotics detection and explosives detection.
I think a lot of people will be very happy to hear that. And how rapidly can these machines assess what's going through the scanner? Would they be markedly more quick or more slow than existing technology?
So typically what we're doing is using the machine to, as I say, resolve the alarms which you're getting from CT scanners at the moment. So you're dealing with, as I say, 20 to 30% of the bags. Depending on how deeply you want to examine that bag, it can take, they typically operate at 0.2 meters per second, which is the same speed as a passenger checkpoint. But in a whole baggage application, one machine can serve multiple high-speed baggage machines. So in fact, although it might take a fraction longer, it's not material in terms of the overall operational necessities of an airport.
OK, fascinating topic, Richard. We do appreciate you spending time to talk to us today. Thank you.
It's been my pleasure. Thanks very much.
Some other business news stories for you now. And the drugs giant GSK said today that Shingrix, its blockbuster shingles vaccine, remains effective years after being administered. The company published trial data suggesting that 6 to 11 years after vaccination, Shingrix had 79.7% efficacy in participants aged 50 years or more. The vaccine's efficacy was at 82% for patients who had been vaccinated 11 years earlier. Well, globally, shingles, which is caused by the same virus that causes chickenpox, will affect up to 1 in 3 people in their lifetimes. Global Counsel, the advisory firm launched by the former Labour Minister Lord Mandelson, has reportedly been valued at £30 million. The Financial Times says that is the valuation placed on the business after the Messina Group, an advisory group set up by the former Obama campaign manager Jim Messina, acquired a 20% stake. Well, until now, Global Counsel has been majority owned by Lord Mandelson and his co-founder, Benweg Prosser, a former communications director to the former Prime Minister, Tony Blair. Saga claimed today it will return to making an underlying profit this year. The cruise operator and insurance provider was reporting a pre-tax loss of £129 million for the year to the end of January. That was down from a loss of £72.7 million during the previous 12 months. Well, Mike Hazel, Saga's chief executive, said the company's ocean cruise business had enjoyed an outstanding year, but admitted its insurance business had continued to be hindered by challenging conditions. The shares have risen by 2.75%. I should point out they're down 95% since it floated on the stock market a decade ago. Now, during the last few years, consumer-facing businesses have let customer service slip as they focused instead on managing costs following the rise in inflation. Well, that's the claim from Zendesk, the $15 billion provider of customer support software, which today launched a new version of its service in partnership with Amazon Web Services and the artificial intelligence company Anthropic. Well, joining me now from Las Vegas is Adrian McDermott. He's Chief Technology Officer at Zendesk. Adrian, good afternoon to you. I mean, people have complained, obviously, since the pandemic about poor customer service. Won't incorporating AI risk furthering that relationship, distancing them further from the businesses they're interacting with?
Well, I think we have to look at the underlying causes for that slip in customer satisfaction. We went through the pandemic, so many businesses became digital, and as they became digital, they surged their employees to answer customer inquiries. And then as inflationary pressures kicked in, I think it was hard to maintain that certain level of service because the costs were prohibitive. At this point, automation can really help. AI models have really come a long way, I think, in the way that they can help customers. They don't just know things, they can do things. And so the products that we're launching are really all about providing great service and being very specific to a customer's needs.
There have been lots of incidences where AI customer service agents have been tricked into saying some pretty shocking things. I mean, there was a famous example with DPD, I'm sure you're aware of, where they were tricked into swearing and actually denigrating the company itself. Are you pretty confident you can iron out that sort of wrinkle?
Yeah, I think we've come a long way in terms of understanding how to extract from a customer what their intent is. Is this a return? Is this a product problem? And then using that information to constrain the AI down. From a prompt point of view, you basically tell an artificial intelligence model that the answer that you seek is in these few knowledge-based documents, is in this corpus of knowledge. And if they only answer from there, they stay what you would on brand and on script and understand how you want to talk to your customers.
In your experience, I mean, obviously you have a great many different customers over a great many sectors. Which have been the hardest areas to enhance customer service using AI and chatbots?
Yeah, we have over 100,000 customers worldwide speaking, over 100 languages. And I think there are challenges with local nuances and really understanding the tone and the language that customers are looking for. One of the features that we actually had to introduce recently was the ability to shift and control the tone that you use to talk to customers between more formal and less formal, so that you can kind of represent the way that you speak to people more accurately. That's a challenge for machines to really learn and have empathy and understand how a conversation is flowing.
Absolutely. Now, you're partnering with Anthropic and with Amazon Web Services here. What made you choose to partner with them as opposed to, say, OpenAI?
We also have been partnering with OpenAI for the last year. I think what's valuable for us with Anthropic and AWS, Amazon Web Services, is that our customers want to process their data where it lives, right? I think their data is really what's important here, more so in some ways than the model. And so if you can put those two things together in the right place, you actually then are able to personalize much more and be more specific to customers' needs and the way that they want to talk to their consumers.
OK, Adrian, we have to leave it there. Good to talk to you today. Thank you.
Thank you so much.
Still to come here on Business Live, we'll have a look at how the markets have done this afternoon. Stay with us.
found a assemblage of 500 items, medieval, Bronze Age to medieval, which is the biggest assemblage of Bronze Age to medieval finds from the whole of Fife ever, from one area. The coins date to 1466 AD, and they're copper alloy. They're in pristine condition, and the last hoard of its type was found in Crossraguel Abbey in 1919. So it's a really, really rare hoard, a once in a century hoard. It was found in a latrine, obviously, in a toilet. It was obviously been dropped with a monk, and the coins were found in the sediment of the latrine. And obviously my coins were in far superior condition due to the soil. So it was just amazing. Yeah, what a buzz. It was 52 of the farthings we found. But also in the general area, we found 2 John Balliol farthings, the only 2 found in the whole of Scotland. So they're extremely, extremely rare coins. We also found a Malcolm farthing. I think there's only 3 found in the whole of Scotland. So just exceptionally rare coinage on this site. We don't actually know if it's a hybrid site, if it's a settlement stroke market site, but it's clearly very significant. Yeah, the medieval ring was found a wee bit away. It was maybe a field or so, but sometimes you have to wait because of the crops that are in stubble when they get harvested, and they're too high, and you can't get your metal detector right to the ground. Yeah. So you just go right over the finds, you know. So the conditions have to be perfect. In the carrot harvest, the conditions were perfect. You were getting your metal detector right to the ground, which you actually need for medieval material because it's so thin. So you have to get your detector right to the ground for optimum conditions. We've got a 50-50 chance of getting the permission. It just depends, you know, your luck at the time. If somebody else is detecting the land, or if the farmer's actually wanting a metal detectorist in the land. So it just depends on your luck.
If you forgot your pajamas, Emirates has got you covered. Fly Emirates, fly better.
Well, the pound has risen against the US dollar after March inflation failed to fall by as much as expected. Sterling currently ahead by nearly a fifth of 1% against the dollar. It's actually eased this afternoon against the euro a little bit. The single currency up by a quarter of 1% right now against the greenback. On the equity markets, well, this is how Europe has finished this afternoon. All of the main European indices in positive territory. Plenty of talking points today on mainland Europe. The luxury goods giant LVMH, which of course is France's biggest company, that's risen by 4% after quarterly sales proved better than expected. And a real showstopper over in Frankfurt, Adidas, up 9% after it raised its profit forecast overnight. Well, here in London, the FTSE 100 has also finished with its head above water, up 1/3 of 1%. The mining heavyweights have really done the business there for the FTSE on the back of higher copper and aluminium prices. Rio Tinto, a notable gainer, up 2.5%. That's despite the fact that quarterly iron ore shipments, which it reported today, came in below expectations. Another gainer to mention is Burberry. That's risen by 2%. Well, actually, it's finished up 1% higher on the back of the trading update from LVMH. While the betting and gaming group Entain, that's risen by 1.5%. The Ladbrokes owner posted better than expected online gaming revenues today. Outside the FTSE 100, well, I've already mentioned the key story there, international distribution services. Currently some 20% to the good on the takeover approach. But Dr. Martens, which issued another profits warning yesterday and fell by 29%, that's off another 2% this afternoon. Over on Wall Street, well, it's been a fairly quiet opening, to be honest. The Nasdaq, as you can see, is off 2/3 of 1%. But there are some gainers to mention, and United Airlines has risen by 11% after its quarterly numbers came in ahead of expectations, lifting the likes of American Airlines, which is up 4.5%. Meanwhile, the oil price has given back all of its gains from yesterday and more. Barrel of Brent crude is currently changing hands at $88.59 a barrel. That's off just over 1.5%. Well, with me now is Lucy Coutts, Investment Director at JM Fin, and the newly crowned Wealth Manager of the Year at the City of London Wealth Management Awards. Lucy, congratulations.
Thanks, Ian.
International distribution services, what a strange situation. No one saw this coming.
No, absolutely. I mean, the bidder, he owns already sort of 27% of the company, and he's put in a cash offer. He's got until the 15th of May to decide whether he's going to put up and shut up, because IDS has rejected his bid. But we'll have to wait events, because if he goes over that 30% threshold and the takeover rules, then he'll have to run with it. But it's hard to understand really what value he sees in that business. Obviously, I'm not in his mindset, but you know, our letter delivery is in structural decline. 2 decades ago, 20 billion letters a year, and now it's just 7. So and there's a lot more competition out there.
Well, there is. I mean, the market has been kind of assuming that this business would break itself up. It's got a fantastic international parcels business, which is the bit that everyone's interested in, and then Royal Mail, which is this sort of troubled legacy business.
It is. It's always that last mile, isn't it? Everything's efficient until that last mile, when it becomes really, really inefficient. And we've all suffered the vast price hikes in the cost of postage. And then, of course, we're now seeing that the second-class postage is only going to be delivered on many fewer days.
What about regulatory intervention? I mean, the government is taking a much more strident line now on things like infrastructure, on the telegraph, for example. Is this something that might be blocked?
Yes, I think so. I think it'll be a bit more of a political sort of perhaps rhetoric floating around. Is it really national security? I don't know, but you know, certainly we're seeing the Conservatives sort of going to have a look at it, and I think Labour would really have wanted to sort of see perhaps Royal Mail being sort of privatised. Yeah,
you never know, do you? Now, elsewhere today, ASML, which I know is a favourite of yours, the Dutch chip technology business. Q1 update from them.
Yeah, we've had a sort of muted response really to quite a big shortfall in the number of orders that the company's received in the first quarter. So it's come in with 3.4 billion of orders. We'd expected 5.4. So it's a significant shortfall from what we'd hoped for. However, the shares are only down, when I last looked, about 3.5%. So that really tells you that, you know, really we're in this sort of semiconductor cycle trough. ASML itself is saying we're in the bottom, we're coming through. We expect a very, very strong 2025. And that's basically driven by the fact that it's the only company in the world that supplies these machines to the semiconductor manufacturers. And we're also seeing lots of manufacturing sites across the world being built. That demand will come, and that's why you've seen a very muted response to what's actually quite a poor set of numbers.
Yeah, such an important company. Staying in Europe, LVMH. Bit of a relief rally, this?
Yeah, some really, really good numbers. We have to remember that LVMH is a house of many brands, and there are certain brands within those numbers that have done better than others. That's expected. So it's got defensive qualities from that perspective. But really, this is a company that sets the tone for the whole of that peer group. We've got Hermès reporting next week. very good numbers. But what's actually quite interesting is that we're seeing this luxury sector, its growth, its trajectory is actually being underpinned now by the rise of the number of women in work, their length of careers, they're moving higher up the ranks, and they've got greater spending power. And actually, I'm told that we're spending more on luxury items ourselves.
I'm not surprised to hear that. What about the inflation number then? I mean, a bit of a disappointment?
A bit of a disappointment, really. But we're seeing this again in the States as well. So I think, it's not come down as quickly as we'd wanted. I think what I'm slightly more concerned about is the services number, where we're seeing it quite sticky at 6%. And that's basically because of the wage growth number that we're seeing. I think it's going to kick back interest rate cuts maybe till September, November. Wow. So June is now possibly out of the equation. But we've got a weaker economy here in the UK, so that might force the Bank of England's hand to act faster.
Well, of course, and particularly given this rise in unemployment and the clearly softening jobs market that we saw yesterday.
Exactly, and we are seeing a rise in credit card debt, so all the indicators are there that actually, the economy is very, very sluggish and it is slowing. So again, we might see those cuts come sooner now, but otherwise, if it's just based on inflation, it's going to be September, November. Yeah,
not terribly good news for Jeremy Hunt, that.
No, it's not. He probably didn't really want to hear that, did he?
No, indeed not. Lucy, got to leave it there. Lucy Cootes, the award-winning Lucy Cootes. Good to see you today. Thank you.
Thank you.
Well, that's it from me. I'm back again tomorrow morning at 11:30 with the next edition of Business Live. Hope very much to see you then. In the meantime, do stay tuned. Coming up next, it's Mark Austin with the News Hour. Thanks for joining me today. Cheerio.